Hello, I'm Dr. J from OptionMonster.com. The reason Jamie's reports are so valuable, folks, is the VIX is a metric of risk in the market. So as it picks up, that means people are worried about protecting. If the market's been going up, when their VIX is going up, well, then that means they want to protect. They're worried about the market rolling over. If the market's been going down very hard, well, obviously, then they're worried that maybe the market makes a U-turn and goes to the upside. So you got to watch the VIX. That's why this report is so important. Remember, you can follow us on Twitter, twitter.com/optionmonster.com. Take it away, Jamie.
Welcome. This is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, the big news today is the June VIX settlement. We settled 3103 on the opening print in the SPX this morning. It was interesting how we went into the close. We talked on yesterday's Sonar about how the VIX cash looked unusually high as compared to the VIX future. We did go into the close like that. So the VIX cash went out around 32.65, whereas the future closed yesterday 31.80. So the VIX cash was about 85 cents higher than the future, which is an unusual difference going right into expiration. What we had was very wide S&P 500 markets and people not very aggressive on the offers. The S&P 500 isn't a fully hybrid product. It's not fully electronic, so it's only one or two real market participants you're seeing on that. So for whatever reason, that market participant, less aggressive on the offer, led to higher VIX cash numbers than the future would indicate. So it's important to remember, always look towards the future. That's where you're really going to see the best indicator of where people are pricing the VIX. So it was 3103. Right now we're just about S&P terms where we opened, and the VIX cash is at about 3150. So the print was a little bit on the low side. A lot of sellers in the S&P 500s on the open, but nothing extreme, nothing too far out of the ballpark. In trading today, we've actually had some interesting binary trades. We haven't talked about the binaries recently, but a binary is a yes or no option. The binary call is worth $1 if it goes in the money, and it's worth nothing if it doesn't go in the money. So today we had somebody playing some binary call spreads. Now, one of the spreads they bought was the July 2050 call spread for 96 cents. Now, the maximum value on that call spread is $1. So the range that it's $1 is between 20 and 50. So when you buy a binary call spread, you're really more selling a strangle. If we settle outside of 20 and 50, what they paid 96 cents for is worth $0. If we settle in the middle, what they paid 96 cents for is worth $1. So anything outside of 20 and 50, bad for the customer. Anything in the middle, good. So they're selling a very cheap strangle, speculating that it's very likely that we'll settle between 20 and 50. They're laying about 25 to 1 odds because of the current high probability of a settlement between 20 and 50. So that's what we've had so far today. A couple of buyers on the at-the-money VIX calls. The 32 half strike, there were some buyers, 35 strike. But the big news, the 3103 VIX settlement for June. Jamie Tyrrell with Group 1, Option Monster.